how I lost over $25,000, 25K, 25 big ones, whatever you want to call it. In this video, we're going to be diving into exactly what caused me to lose $25,000, how I can ultimately learn from this to make sure it doesn't happen in the future, and then hopefully there are some big picture takeaways that we can take out of this experience, out of my losses, so that you don't have to do the exact same thing. And there's a lot of reasons why I wanted to make this video, and at the core of it all, it really comes down to the purpose of the channel. It is ultimately to learn from each other, learn from my mistakes, learn from my wins, learn from my losses, all of that stuff, to make us better investors, traders, whatever you want to call it, whatever you want to do in the long term, because we all know how compound interest works, right? That $100 you deposit today into account at a 10% interest rate over the course of the next couple of years at 10% per year compounded, right? Do the math on where you'll be in 5, 10, 15, 25 years. And not to mention if you can deposit more money or if you can be consistent in your deposits, right? That's ultimately what it comes down to. And these lessons can ultimately make us better at compounding our money. And that's what it's all about, at least how I see things. And that's what I think is very, very important to take away. Now, I pride myself on full transparency. As you guys see, we go into the portfolio every single Saturday on this channel. And the best part about it is that we don't have a Patreon, a this or that a lot of people out there quickly jumped into. And you'll see that these days, a lot of people are either up in prices or disappearing off the face of the earth because either they can't live up to the expectations or they're losing money in their own trades, investing crypto, this, and that. And now they gotta, up their prices to keep up with their lack of views, their lack of subscribers, all that stuff. But we don't have to do that stuff because number one, I don't like that. And if I ever did, I talk about this on the live stream. If I ever did something like that at some point for some value, for some reason in a group, and we felt that, hey, you know what, a group would be a great place to do that, kind of closer knit, whether it's a Discord, whether it's this or that, who knows in the future. If it's centered around investing, trading, and you're already the person running that group and you're already successful and you're already doing fine yourself through your own investments and trades, well, then you don't need this money anyway. So the way I would see it is it's a pay what you want, right? Pick a amount that you want to pay. Pick any amount, whether that's $1, $10, $100, $500, $1,000 a month, whatever it is. Who knows, who cares the time frame? Because I think personally, that's probably a better way to go about things. And maybe there's some flaws to that. Obviously, you're not able to weed out those who are maybe more serious than others. I understand, but that aside, let us dive into the big picture behind this $25,000. Now, at the end of the day, it's not all realized losses. Some of it is unrealized, some of it's realized losses, but I want to walk us through the progression over time. So I want to take us back to June 26th, 2021. In that time frame or on that date, the portfolio that we had here on Webull was actually valued at over $52,000. Fast forward that to January 28th, 2022, the portfolio was actually worth $24,545 to be exact. Now, that is actually over a $25,000 decline in roughly 7 months or so. So let's talk big picture. Big picture, the first thing that I want to make sure we talk about is the end of the day, here's what happened, right? We had a lot of stuff going on. You had the pandemic craziness in the market, you had small caps, you had large caps, you had all-time highs, you had absolute insanity across the stock market. And there was a lot of different strategies and a lot to choose from. And realistically, in this past 6-7 months, I was just very confused as to what I was doing in this portfolio. Really, that's what it comes down to. But I will say I did spend the past 6 months testing a lot of different strategies, testing different styles of trading, and I tried to implement all of these things pretty much at the exact same time. And that, I will tell you right now, is a terrible strategy to implement on one portfolio. We'll dive into why that didn't work here in just 1 second, but I want to start there. Give us the background, give us the frame, big picture, what happened, and really what it comes down to personally is I was just confused. You had simple investing strategies that would average 10% per year, averaging over 25% in the year of 2021. Insane, just index investing, pretty much the most boring form of investing that there could be. There's no individual stock picking, there's no, okay, well, let me actually put my skills to the test to find undervalued companies, to find this, to find that. There's none of that. At least there was none of that in that span of time. And it was very, very boring in terms of what was working. The large caps, the big name stocks would work, and everything else was tossed to the side, and everything else was just selling off day after day after day. Now, of course, there's ups and downs, there's different market conditions, there's this, there's that, but it was different from what I had been seeing, not only through the pandemic market, but really back through 2019 when I really dove into small cap trading. And that's primarily what I have traded, which has now started to change as time has moved on. And I'm open to a lot more things. And I'll talk more about the plans and strategies going forward and how to learn from this and what really happened in just a few minutes. But essentially, that is on the surface what was going on. And back through 2019, there was a fundamental stock picking approach that worked, right? It didn't matter if the market was going up or down. There was an approach that you could find undervalued stocks that would actually outperform the market. And in this case, a lot of that was not working as we moved in the back half of 2021. Let's talk about why having multiple strategies in the portfolio, trying to do different things at the same time, did not work. First and foremost, you had cash tied up all over the place. You tried to do long-term investing with some stocks. You tried to do leaps with these stocks. You tried to short with this money. You tried to swing small caps, to day trade here, and your money was working in 7 different directions. And realistically, that's just not mentally, for me, a good strategy. It was mentally draining because I had to think about so many different things, whether realistically I had to think about them or not, because I just saw them in the portfolio. They were there. They were always on the mind. Now, should you just buy a stock and forget about it, or put on a short and forget about it? No. But in the same portfolio, it's very difficult, I feel, to go back and forth between different strategies and not get caught up into either FOMO or get caught up holding something longer than you may have wanted to. A lot of things can happen, and that was a recipe for disaster. The way I see it is this: you can't be great at 7 different things at the same time. You can be good, but you can't be great. And being good in the stock market is not going to beat those average returns. You need to be great, right? 9 out of 10 active traders are actually losing money. And actually, after about 12 months, most traders are gone. They've lost everything and they are out of the market. So if you've made it past 12 months and you're still around and you're still alive, you're actually in a really good place. So let's dive deeper into what actually happened. So when it comes to small caps, I have a swing trading approach and a strategy that I love to use when trading small caps. And I like to buy stuff at the absolute lows, towards bottoms, supports, 52-week lows, 2-year lows. Like, those are the types of stocks that interest me because the risk reward many times is actually a lot more in your favor than you may think. Now, you have to do some due diligence. You have to look into the stocks. You can't just buy them and forget about them and think they're going to bounce. No, but it's a great strategy. At least since 2019, it was a great strategy until recently, where stocks hitting new lows continue to hit new lows. Now, that will eventually change, but it continues, and you can bleed out a lot over a relatively short period of time. Really, since mid-November to late January, that was the biggest bleed out window. And that was a time that realistically I should have been a lot heavier cash or managed my positions a lot better. I really added heavy too early. And the reason why was because back in 2020 and 2021, early 2021, we had a market that made no sense. I had a strategy that was to add on dips in chunks and to really kind of strategically get my average down on certain stocks. And the problem was, we had a period of time where there was no dips. Any little dip was immediately bought up. Offerings were a good thing. In 2020 and early 2021, offerings were a good thing because it provided a dip to get in lower. That's literally the craziness we saw in the stock market. And so that strategy that I had of adding in chunks on dips or on significant drawdowns, that strategy didn't work because we never got significant dips. So I had to add a lot heavier, a lot earlier into my positions to capitalize on those stocks running on up. And eventually, the music stopped. AMC, GameStop, that kind of was the end. The music stopped after that, and these stocks slowly bled off. And that's fine. A lot of these stocks were overvalued anyway, or most of them, if not all of them, were. But I was too slow to adapt to that changing market. And ultimately, going forward, that's something that I have realized, and I hope to adapt to a lot faster in the future. We also tried shorting, and the problem is that Webull is not the best place to short stocks because they actually restrict you after a certain point in the day. There's no shares available to short, so you can't get borrows, and sometimes it really throws off your strategy. So if you are in a short and you wanted to average in one more time just to kind of get yourself to a spot that you wanted to in terms of your average, well, sometimes you can't. You get some shares early on in the day, and then you can't get them later in the day if the stock is running up further. And so the next day the stock drops off 25%, but you couldn't play that because you couldn't actually go through with your strategy the way you want to. So Weeble's not the best place to do that. So I tried doing that. Didn't really blow up on anything by any means, but I got stuck in one stock. It was ACY. It made no sense to me. Got stuck in that one too long. Lost a decent amount of money on that one, and that definitely didn't help. I also tried Leap options on big picture plays, and I think it's actually a really good strategy for long-term investing, whether you're going to be looking at 1 year, 2 years, something like that, buying deep in the money Leap options. The problem with these is that on these big picture plays, they're currently getting bled out with the stock market. So the stock market dips or drops, and these options are going to lose a lot more value than the stock. So the stock's down 5-10%. Well, these options can be down 25, 30, 40%, right? And so the longer it takes, some time decay in there. And so, you know, it kind of becomes an additional bleed out factor when the markets are weak. And so that's one of those things that you have to play the games of the ebbs and flows of the market, but it's part of the downfall. And then lastly, I was day trading a little bit here and there with small size. And I have to say that this is one of the most promising things I have really kind of taken away from this. Now, the problem is that it was small size. So when I am in a swing trade strategy or with a swing trade approach for the most part, which is essentially what got me to the point that I was. It really got me from essentially a couple $100s to, you know, multiple $1,000s, eventually 15,000, eventually 25K, and then to 50K, and now here we are back at 25. But I got there with swings, and so it was very difficult for me to move away from what kind of got me to that point. And so I always fought this battle of like, I know I can go in and wake up every single day, clean slate, and find 1 or 2, 3, 4 trades. And yeah, you're not going to win every single day. You're not going to win them all. But I know I can do that on a consistent basis with tight risk management and be profitable every single day. I almost have no doubt in my mind if I started a fresh, brand new account, no PDT restrictions, I would have no problem with day trades at the end of the week, end of the month. I'd be up. But the problem is that my cash was too heavily tied up in other positions that were swings, longer term holds, leaps, shorts, this and that I only had a few dollars to play with on those day trades, and it wasn't enough to move the needle. Now, that's certainly something that I want to change going forward, but that's also one of the downsides that, you know, I wasn't able to hone those skills. And really what hurts the most as we kind of move into my current plans and thoughts going forward, what hurts the most out of that is that I felt very confident in being able to compound and being able to be profitable. And so what hurts me is that I am at the mercy of the market based on my current strategy with swings. I'm at the mercy of the market. And if the market's super strong, we're doing good. If the market's not strong, you're going to see those fluctuations up and down, and generally, as we've been seeing now, down, which is part of the game. That's fine. But the way that my mind works, I'm someone who likes to be improving, whether it comes from, whether it comes from, working out, whatever it is, improving every single day. And it's kind of, whether it's healthy or that's not healthy, that's just how my mind likes to work. I like to improve. I like to see the progress over the short term, whether it's very, very small, I don't care. I want to see that progress in the short term. Whether it's, hey, I'm red this week, but I respected my stop losses, I respected my plans, that's a win, right? I want to be able to see those things and not have to look at my account and say, well, the market was down, so we're down 10K or down 5K or we're down 3K. I don't want to look at that and have to worry about that. So we're obviously not going anywhere. We're going to keep up these videos trading stocks for $100,000, but there may be some changes going forward. So I can see at some point this year that account, the Webull account, goes all cash nightly. I could see that happening, maybe some very, very small swings. And the reason why is just because of what I was just saying. I want to have that account to literally just be fresh and wake up every day. The market's down huge. Okay, great. Let's look at puts. Let's look at shorts. Let's look at this. Let's look at that. Market's up big. All right, let's look at longs. The market looks pretty strong. Let's look at longs or reversal trades. I want to be able to adapt to what's going on currently and not have to always open the account in the morning and go, oh man, we're down huge again. There's an offering or there's this or there's that. I don't want to have to worry about that stuff. It's also going to require me to move money out to other accounts so that we can set up the other portfolios I want to set up. So ultimately, I want to move money into a dividend portfolio, right? And start building that out. Move money into my IRA and have a set amount, max out the IRA every single year. Max that out, have our long-term holds there. Let's say, buy and hold investments, things like that. Have our, have some money tied up into some index funds, right? Have some money tied up into some VOO, some SPY, right? Something like that. Then have our money tied up into other plays. Let's say some Leap options. Let's say an account just for shorting. We can open up Interactive Brokers. I just recently opened up a Trade Zero. That account, those accounts, maybe just for shorting, just to kind of keep things clean. If I see a short opportunity that I like on a low float or a small cap, that's a day trade short account. Like, that's the type of stuff that I want to separate myself and have all of those different kind of strategies in different portfolios so that when I open that portfolio, I know what I'm looking at. I know these are stocks that I'm not intending to sell, or these are stocks that I'm looking to collect dividends. These are stocks that I'm only looking to short for the day, or for intraday, or for whatever it is. And that's it. And that would make it a lot easier mentally on at least my brain, right, or on me. And ultimately, I think that that's going to result in better returns in the long run. Next, it comes down to cash. I want to hold a lot more cash, and that will come with the Webull portfolio nightly, because if I see an opportunity that I really know is a solid setup, that is a very, very great opportunity for me intraday, intra-week, intra-month, intra-year, whenever the opportunity comes up, you want to be the one with cash, right? At the end of the day, if you're someone who is maxed out leverage, or you're all in on stocks and this and that, that's great. If the market's strong, that's great. But you also are going to be the person that in a crash scenario, in who knows when and if that ever happens again, to whatever degree, but it probably will in other degrees, whether it's a housing market, whether that's a stock market, who knows, whether it's small caps, whether it's one stock that you love that for whatever reason crashes on earnings. If you don't have cash and you don't have that money to be able to add that dip or to take advantage of that, right, you're putting yourself almost at a disadvantage. Now, you really aren't, but in a sense, you're not allowing yourself to take advantage of that opportunity that you have seen before and that you can capitalize on. So that's why I want to hold more cash. And I don't look at cash as a bad thing in an inflationary time. I understand inflation, but here's the thing. I don't necessarily care, because at the end of the day, I'm not going to have all of my net worth, my savings, and whatever checking and investing accounts all cash ever. Probably never will happen. But if I have a lot of cash on hand and I can take advantage of an opportunity that maybe returns me 10% in a week or 10% in a day or maybe even more, right? Who knows? Then I don't care about the 7% per year. And maybe that comes down, maybe it goes up further. I don't know. I don't really care about that. It doesn't matter to me, because if I know I was able to make 10% of my money this day, and then I hold that cash for the next 2-3 months, who knows? And then the same opportunity presents itself in another couple months. I take advantage of that and I make 10% on that money. Well, then I just beat inflation anyway, but I would rather have that ability to take advantage of when the opportunity presents itself than not be able to, is kind of how I see it. And the last couple things here is need to adapt faster. And it's one of those things I understand we've seen, right? We need to be able to adapt faster to the market conditions. Ultimately, that's going to be a major key. And then really at the end of the day, guys, it's all learning experience. It's all a learning experience at the end of the day. The market's going to be here tomorrow, the next day, then the weekend, and then the next day after that. So it's going to be here. It's not going anywhere. There will always be things to adapt to. There will always be change. There will always be opportunities. It's really about staying in the game. And as long as you can stay in the game, you're putting yourself in a position to take advantage of a potential opportunity. And learning from these mistakes are ultimately going to make you better at compounding your money in the future, whether that's minimizing losses or increasing gains, increasing wins. That's what it comes down to, and I hope that's the biggest takeaway here from this video. So let me know your thoughts in the comment section down below. Like always, any comments help the algorithm out. Thumbs up on the videos help as well. We're not going anywhere. Hopefully these videos are helpful to you. Tons of playlists, tons to go back through, and I really can't wait to see how this progresses going forward in 2022. I'm really excited for the rest of the year, whether the market's up, whether it's down, I don't care. There will be opportunities to take advantage of either way. Thanks so much. Some links to get some free stocks and resources down below in the video description like always, and we'll see you guys in the next one. Peace.